Hello, this is my morning video. I'm going to try to keep her under 10 minutes. We're at range highs, of course. Going to look at the fund flows, look at the U.S. equities, uh, then some earnings calendar, and some stuff. I've got have a short watch list. Okay. Okay. That being said, as of yesterday's fund flows, what really alerted me, and I have been pointing out, VT, this is the world ETF without U.S. equities. We actually got net outflows yesterday. So just keep that in mind that the VT at these recent highs, that's giving me a red flag that some money is rotating out of the global markets. The EFA is also a fund that deals with global markets, and some money's rolling out of it too. Okay, Japan, money's rotating out of Japan. And then on the flip side, here in the U.S., we had some money started coming out of the utilities. So this is actually a little slightly more bullish signal for the U.S. equities. So keep that in mind. And then we had a little bit of money more money coming out of the Russell. Okay, so just keep that in mind. To give you a little idea, and mainly those are the important things I want to say. Tenet Healthcare had blowout earnings yesterday, so we did see money rotating into healthcare. This is a defensive area in the markets, so just keep that in mind. Monies were rotating into that, and so we got getting a mixed signal here. The mid caps, which actually Russell has a lot to deal with, they had money flows coming in. So despite the fact that some money was coming out part of the Russell, the mid caps were actually catching a little bit of a bid in the yesterday's session, and the S&Ps were catching a little bit of a bid yesterday. So basically, they're trying to prop up the U.S. equities at the expense of the global markets. That's kind of what I saw yesterday, and so that's just a pretty good rundown of what was happening. Now, the utilities, I want to start with the breadth indicator, our breadth chart for the utilities. And by far, this is the most overvalued breadth chart that Stock Charts puts out. We're at the 92% or almost 93 percentile on the breadth indicator for utilities. So everybody and their brothers parking their money in utilities right now. So for a contrarian view, thinking the markets have seen a high and money's about to rotate out of the U.S. equities, this already at the 93 percentile. You would think money is going to rotate into equities to when the markets pull back, but they're already into the utilities already. So this is supportive, in my opinion, of a continuation pattern in U.S. equities as money rotates back out of utilities. So basically, everything over the 70 percentile is overbought, and everything under the 30 percentile is oversold. And we are way overbought on utilities right here. So this is a more bullish scenario for U.S. equities, in my opinion. Now, I also wanted on my breadth indicators. As you can see on basic materials, the materials sector, we are hitting a multiple top on materials right here. So just keep that in mind. That's a contrarian indicator that the materials, the markets could be, like I said, going to sell off a little bit because our materials have, this is a leading indicator for the broader markets. And we are in the overbought scenario on basic materials. So that's another, so we're getting conflicting signals here. Either utilities are bid up too high or our basic materials are bid up too high. So just keep this in mind, the conflict we're having here. Both of these are overbought, and I did want to point out that situation as we were going into this trading week. And then, let's see here. Consumer staples. Consumer staples are relatively cheap. We're not overbought yet on consumer staples. So just keep this on your watch. If the markets were to come in a little bit, there is room for rotation back into staples here. So I wanted to keep that on watch. It doesn't look like we are finding any type of upside resistance right here on our consumer staples. So this is an area that we've had a little correction in the past few days, and there might see some rotation in the next couple days in consumer staples, in my opinion. And then another area that's really underutilized here, and that's the telecom space. And this is more of a risk-on scenario. But Verizon's, AT&T's, and anything to deal with telecom. And here we are in the telecom conference this week. And, you know, these are relatively undervalued versus the rest of the markets. So going forward, I would think to see a breakout to the upside, we might see an increasing amount of money going into the telecom area going forward. Okay? And that is typically a technology area. And we're still way undervalued even on the NASDAQ composite based on our breadth. Okay? I know the prices are getting a little lofty here, but I'm just saying there is room to the upside if the markets decide to go further higher. And we really don't have any significant resistance at this price point. We've had typically we go up to the 64, 66 cents, up to this area before we see any type of responsive sell-off. So this is a little bit more bullish scenario that technology is still has a nice potential to the upside. Okay, a quick rundown on our major U.S. indices. We do have a little bit of sell-off going on in the global equities. Nothing major, so I'm not even going to cover the other equities as of right now. But what's going on here in the U.S., we're giving up all of the overnight session, and we are trading right here at the bottom of the overnight session as of right here, right now on the SPY. I have this based on a 4-hour market profile. So that gives you an idea. I break it down to 4-hour here, and then daily profile. Let's zoom this up a little bit. On our daily here, we are trading right at the daily point of control as of right here, right now on our S&Ps for the pre-market. And this is the furthest yet that we have been away from this primary uptrend. So we could see maybe we're far enough from this primary uptrend line that we're going to see a responsive bid. I'm not overly that in that case. I think we're actually trying. This is the second day we're moving away from this uptrend line, and we're opening lower. So I think we're trying to resolve down to the market maker lows for the week. And we are below last week's close also. This pink line right here, that is the last week's closing price. And we are marking prices lower below last week's close, thinking we're going to resolve back into last week's value areas. And as you can see on our daily here, this is our last week's overlapping values. And I think what we're going to do here is come down and retest. Well, actually, it'd be, let's see here. We would be retesting the last week's prior week. The next target would be 2 week ago close in the S&Ps, and that would put us at the 277.43 area. I just don't think we're going to get a whole lot of responsive selling, but we're going to get enough responsive selling to start getting people to cover their short or to get stopped out. And we haven't had that yet this week, and we are set up for that scenario to see a little bit more downside pressure to signal some more stop losses and get opportunity build up for a potential move back to the upside. So that's what I'm seeing in the SPY. And we're getting continued, despite very good earnings in the overnight session, we're seeing 10, 12, 13% gains in some core earnings. We continue to see a sell-off in the equities. And like I said, I just think that they're trying to trigger a lot of stop losses and to reset to lower prices to build for a bigger move higher. That's kind of what I'm seeing here. I'm not overly bearish, but I do think, like I mentioned in my last video, I was bearish. I didn't specify. I'm not overly bearish. I do think the market needs to have a correction here. And so basically, anywhere in last week's value is still very, very bullish. And we are crossing out of this primary channel, even on the Qs. So just keep that in mind. We are breaking, but just because we're breaking out of a channel, there is overlapping volume support. It's not like that we have elongated volume. The market's rightfully slowed down. So now we're getting overlapping weekly value. So until we get into those areas to where there was no overlapping weekly value, the downside is going to be limited. It's not going to be just outright total panic. And so the good thing about it is that this is a digestive pattern for some lower prices, so the markets can build out a lot longer term volume value to launch to the upside potentially. So it's very healthy for the markets to have actually a red day for the next couple of days, in my opinion. Even on our Russell, we're still bullish, but this is leading the way to the downside. I do want to point this out. We are not too far away from our monthly point of control. We're back into, inside of our monthly value area. And the next, this trend line right here, that's where we're going to be opening up at. That is our monthly volume point of control. So this is supportive right here, right in this zone right here. There's a lot of support to keep the IWM from really falling out of favor. And the blue line here, this is the furthest the market makers have priced in for this moves to the downside. So just keep that in mind, unless significant selling pressure does come in, we are already at the expected lower end move for the Russell. And it's been a very long time since we broke below the bearish side on this uptrend. So this is our initial indicator. If we start breaking this 155.70 area on our Russell, the markets are going to have a much more greater significant move to the downside, in my opinion. And we are below our daily. We are going to be opening up, pushing out of our yesterday's daily range, of course, but we will be still inside the day before's range. So just keep that in mind as far as value goes, or weekly. Okay, well, this is our weekly here. I'm sorry, and that's our monthly. And we're going to be pushing down. We're right at the bottom of last week's range on the open right here. So just keep that in mind. And with overlapping volume point of control from last week, right at the same point. So there is a lot of support right here on the open on the Russell. Up till a few minutes ago, right before 8 o'clock, our 10-year treasuries were catching a bid, and they were the volume leaders. And right at 8 o'clock, we had actually some more volume jumping in after the earnings results and stuff. But I wanted to point out, you don't typically see at 8 o'clock the 10-year bonds catching the brunt of the volume. So I thought it was a standout that I wanted to bring up here. And basically what we got going on here, we have, as of yesterday, and the ZNs, keep in mind, we had a contract row. So we had because of the contract row, we had it breaking out of this wedge formation on our 10-year treasuries. And we are right at the top of the range as of right here, right now, on our 4-hour. So keep that in mind that we seem to have a sustained bid in our 10-year treasuries. And as you can see right here on our daily, it looks like the 10-year treasuries are trying to result to the upside right here, right now. We do have resistance right above at the 2230 area. So, I mean, it's not like it's got a runaway move, but it does look, if the 10-year treasuries are catching a bid, that typically means that it's a risk-off scenario for the markets today. So just keep that in mind. That's what I'm kind of looking at here. it looks like a continuation in the bonds. But like I said, we did have a little bit more volume in some of these earnings plays come into the markets, and some of these are doing very well here. I know last night Palo Alto Networks, PANW. Now, wouldn't you know it? PANW. You know, they had an impressive earnings results, technology, and so it's really nice to see that breakout. They are trading at all-time highs right here in Palo Alto Networks. Very impressive performance on that. And then we had Best Buy, really, as a retailer. But like I said, retail, consumer discretionary seems to be a little overbought here. And a lot of these retail stock earnings numbers, they're being sold into. So that is a red flag that the breadth in the retail seems to be waning here, and something to keep on your watch list. But yeah, Best Buy did very well. And we had Lowe's out this morning. Home Depot sold off yesterday, and it looks like Lowe's is outperforming Home Depot and doing quite well. And they had actually pretty good guidance for the year, so we'll see if that thing can hold up. But the volumes are still extremely light on Lowe's, so I'm not going to read a whole lot into that move. And the big news for the day, Weight Watchers. And Oprah's already gotten her money out of it, so even with this big collapse, Oprah's still considerably up. She's got had an 8% stake in Weight Watchers, and she's already made all her money back in plus. And despite the big, huge 30+% drop, Weight Watchers seems to be under a lot of pressure, and they even had very bad forward guidance. So not a overly great scenario for Weight Watchers, in my opinion, going forward. And I don't remember. No, that's a penny stock. Chesapeake's hot on fire for some reason. Oh, earnings. Okay, that's the energy play, and they do a lot of gas too, natural gas. So it looks like there's a nice little short squeeze going on. Look at that squeeze scenario for Chesapeake, and it looks like it is catching a nice responsive bid this morning, which is going to be 288. Still can't even get above these moving averages. So despite a really nice little pop here, little short squeeze, it's still having trouble to maintain traction here. It looks like the 330 area would be the next resistance on Chesapeake. It has been a very bearish chart for a long time. Okay, that's pretty much all I'm going to talk about today. I really don't have anything that's really standing out. I do think we're going to see continued sell-off, at least in the morning session, and maybe rebound later today. Okay, that's everything. I will see you tomorrow.